Hi, welcome to Global One Media. Today I'm joined by Fernando Tallarico, who is the Managing Director of Aguia Resources, which is an ASX-listed multi-commodity company with pre-production phosphate and copper projects located in Rio Grande do Sul in Brazil. So hi, Fernando. Thank you for joining us today from Porto Alegre in Brazil. How are you?
I'm fine. Thank you, Bastien. Thank you for the invitation.
So to start off, Fernando, could you please give us a brief overview of yourself and of Aguia Resources?
So my background is geology. So I graduated in geology and then I did a PhD in economic geology many years ago. And I have been over 30 years in the exploration market, always in the exploration market. Started with the major companies, did basically half of my career between Vale, Falconbridge, Noranda, and then the BHP. And then I moved into the junior sector of the mining space, which is really my preference. And I have been working in the junior space in the past 15 years. During my that's essentially it. My team is also very talented. I have very good geologists and engineers in the team that are acquainted in construction and operations of mines, etc. And as for Aguia, what I would say, well, as I said, it's a multi-commodity company listed in Australia. And essentially, what I would highlight is that it's a pre-production company. So we're looking at very mature projects, small and very lucrative projects. When I say small, they're at the proper size for a company with a market cap like ours.
Excellent. And so your Aguia Stratas phosphate project and Andrade copper project have low capital and operational costs. How have you been able to maintain costs at low levels?
So as I said, so essentially, first of all, it has to do with the choice of projects. So let's take, for example, the phosphate. We had the other options that would be more capital intensive. We chose to produce natural phosphate at a very low capex. We're looking at $10 million, 12 million Australian dollars if we include the land, which we already have secured. And with the construction is very simple. But not only this, we had, I'd say, very good or talented choices we made on the processing side. For example, the phosphate, it goes out of the mine. We have to dry the phosphate before we put it in the right grain size to be sold. We had the initial option would be buy a flash dryer that costs $500,000, right? Very efficient, etc. But the impact of this, especially in a small project like ours, would be relatively big. What we did is we essentially engineered our own solution. So we have our own drying system that was developed inside the company that costs a fraction of that. Same thing goes to the copper. It's a very lean operation, which shows the simplest processing choices we had available. Giving you again an example, we're finishing test work of sorting. So we're going to do a pre-selection of all the run of mine after crushing, and trying to reduce as most as we can the amount of material that's going to go into the following stages, and it keeps on going. But clever engineering solutions, cheap ones.
Fantastic. And Fernando, besides cost efficiency, what other unique advantages does Aguia Resources have?
Well, I'd say that really the stage we are is a big advantage for those that are looking to invest in the company. So clearly undervalued if you look at the market cap, and we're looking ahead to construction and production of the phosphate plant. We expect the permit for construction in the next 2 months or so, meaning that at the end of next year, we're going to be in cash flow already. As I said, the entry ticket is very low, the capex. The NPV of this project is in excess of $70 million. And more importantly, the annual EBITDA is around $14 million. So after we get into operation, we will have cash generations to support all the copper exploration going forward and putting the copper Andrade into production.
Excellent. So what are the top risks facing your projects, and how do you handle those risks?
Well, there's always the risk with the environment and the perception that communities have about how we handle the environment.
Mhm.
I'm very proud to say that we have done this very well, and we developed a very strong relationship with the local community. And obviously, then we have marketing issues, right? Getting to the sales and putting developing our market share, securing our market share. And to that I would add, for example, firstly, that we have designed the project to take 10 to 15% of the market share. So it's already it's a small step. We have capacity to go way beyond that. We have resources to do that, but that's going to be the initial state. And on the side, we're entering the 4th year of continuous agronomical tests in the state, in Rio Grande. So we have been testing our product, Pampa Phos, in different cultures. So we have used it in soybean, in rice. These two attend for 80% of the ag production, but we have done all the others, including wheat, corn, etc., comparing its performance with more standard or known products that are used nowadays. And we, our product just performed beautifully. So this is going to be the basis of our sales department, and that's essentially how we're going to deal with the marketing side.
Great. And also, well, your portfolio, as you mentioned, includes both phosphate and copper projects. So what are the advantages and disadvantages of focusing on more than just one mineral at once?
Well, this was a very unique situation, because when we came into this part of the world, nobody really spoke about any possibilities of Rio Grande do Sul being able to produce the right minerals for the fertilizer industry. So this was a breakthrough that Aguia made. We made all the discoveries, and but as soon as this was materialized and we were moving into engineering, we started looking around to other possibilities. And this region where we are working is known for more than 200 years of gold and copper exploration. So we were progressively taking advantage of our position in the field, in the offices, in the infrastructure. So that's really the main say synergy. So it's essentially the same workforce, the same geologists, the same engineers that are engineering and doing the work on the phosphate, and now we're putting advancing with the copper into permitting next year. So that's really the strength of the company, being able to operate in the same area, two commodities. Not only this, each commodity has its own cycle. Right now, we're in a very good position where both phosphate and copper are under demand. So phosphate prices just escalated with the events, the recent events in Eastern Europe with Ukraine and Russia, and which is pressuring the prices from the demand side, and also the copper, all going in the same direction, especially a lot of pressure from the electrical vehicle industry and the change to green energy. But not always we see things like that. So having two commodities in the portfolio of assets may be very handy when to balance things off when one is not that good, etc.
Mhm. Excellent. And do you expect facing any supply chain issues in the future, and how do you plan on dealing with them?
Well, really, I do not expect. Looking at the construction that we're about to initiate in our phosphate project, more than 90% of all the equipment is sourced out of Brazilian suppliers. We Brazil is a big mining country, so we produce anything from huge mills that we're going to be operating in
Right.
say in big iron ore operations up in the north, to smaller equipment that will be supplied to smaller or medium or smaller operations like ours. So
Mhm.
eventually we would have one or two pieces of equipment that we might have to import or do it because of price issues or something like this. But I really don't foresee this. And most of all that we are going to need shortly is already procured.
Okay. That's fantastic. So, as a last question, what factors do you think will help Aguia outperform the market, and what exciting development should investors be looking out for in the coming months?
So really, we're heading towards construction and production. So we're say a year from a little bit more than a year from cash flow. We are also looking to do a capital raise between now and the first quarter of next year. This capital raise certainly will be the last one, and so looking forward, we're gonna enter the cash flow. The phosphate will fund all the copper development, and as I said, the copper next year we go into EIA and start all the baseline studies. On 2024, we are looking to permitting, and 2025 we're looking into construction. After this, we're going to have a combined NPV in excess of $30 million of EBITDA. Sorry, not NPV, a combined EBITDA, annual EBITDA in excess of $30 million. So it's easy to do the math going back to our market share today and the price of the share. And what in other words, I'm saying we're going to have very little dilution from next year on.
Excellent. Fernando, thanks a lot for all the information. We look forward to seeing the next updates from Aguia Resources. So thank you for your time today.
It was a pleasure, Bastien. Thank you.